Sell in May and go away. I swear to God, these days, every time I go on social media or YouTube, everyone is just talking about this. And generally, I would believe it. When we look at the stats over here, you can see that generally May to October period only gives us approximately 2% of returns. But from the November to April period, it's approximately 7%. So people just say, you know what, we're just going to sell right now and then come back in November and buy it up and push our stock and assets to be in a better position because that's where the real growth is. But this time, I'm actually not so certain that selling in May is the right decision. And here is why. First of all, copper versus gold has been showing strength again, and in the past that signals a really good risk on narrative, which we will discuss in this video. Then we have the United States Purchasing Managers Index, which basically shows us the health of manufacturing in America. That has been above 50 and making new highs as well. After that, oil is actually setting higher highs, whereas the RSI is setting lower highs, meaning a little bit of loss of strength. Let's not forget the S&P 500 just keeps setting new all-time highs, and recently the Russell has actually followed along as well, setting all-time highs and signaling risk on narrative for small businesses. So what does this all mean? Well, sell in May and go away might be a good narrative, but in this particular video, we'll dive deeper into why this time it might actually be beneficial to be in the market. Hello, everyone, and welcome to Strategic Markets. You are into our end of week session, and thank you for joining us. We are now going to basically start off with the first piece of news that actually came out today. Iran submitted a 14-point proposal to the United States outlining a two-stage plan. Now, first month, they want to negotiate a deal to reopen the Strait of Hormuz, lift the naval blockade, and end the war in Iran and Lebanon. Which is, if this happens, well, this particularly aligns very well with the oil narrative that I have, which I'll talk to in just a second. The second phase that they want to talk about is after that deal to basically have other months of talks regarding their nuclear program. However that goes, and if negotiations go well in Pakistan, this would be great. But until then, oil is the main picture and story. Oil has been making higher highs on the daily chart, which obviously to the people with the bullish narratives and people who really want your common people to have a really tough time with inflation, oil contributes to inflation massively. This will be problematic if this keeps going higher, guys, and I don't have any hope for a risk on asset market if this particularly goes higher. But what the interesting thing is that the RSI has been consistently making lower highs. Now, unless we definitively move higher over here, I personally think this RSI divergence stands. And from here onwards, we might not even hold this particular triangle where I pointed out this particular red line for support, and we could break down this coming week depending on what happens with this negotiation and news and events from Trump. But for now, I'm actually bearish on the price of oil, but only time will tell how that particularly goes. But what I am bullish on is the business cycle. And the business cycle can be signaled very well through this one particular chart, copper versus gold. Okay. Now, in the past, you would see copper versus gold is over here. And in the green instances, we have seen strength in terms of copper against the movement of price in gold. And you can see over here in 2016, we went up from September 16 all the way up to December of 2017. And then we went down. Now, what is this second chart that I have over here? Well, in comparison, I've taken a bit more of a risk on narrative and I put Bitcoin's chart over here. Bitcoin actually started moving in more like the July of 2017 till December 2017. And you'd say, Yash, why is it that copper started moving in 2016, but then Bitcoin started moving in 2017?
Yeah,
Seems like there's a delay. Yeah, thank you, Steve. And the interesting aspect is my theory in that is that Bitcoin was still a very young asset at the time. Like, consider it like a teenager. Okay, it just came out in 2008, and just 10 years later we're having a bull market and copper is moving up. Bitcoin took a little bit more time to gain confidence and start making its move up. But what you will realize is, again, in May of 2020, copper started moving higher again. Bitcoin started to move up from September. This time, instead of a near 1 year gap, it started moving up in 4 to 5 months, which means that it was being a bit more responsive and it was showing strength as copper was showing strength. Then this time, again, it looks like copper versus gold has bottomed out and moving up. But funnily, Bitcoin is following along pretty fast as well. And my thoughts on that is that Bitcoin is now very much in the long eyesight of Bitcoin is now in front of many eyes due to news coverage and so much social media aspects as well. So when this particular chart of copper versus gold starts moving up, Bitcoin is responding with it. And what supports it is the flip on the MACD that we have over here, which is showing that because the last two times it happened as well, the MACD flipped bullish as well on copper and gold. So that's one of my theses that makes me fairly bullish going into May. Other aspects is the ISM, which is the Purchasing Managers Index. This is basically the health of manufacturing in America. And whenever this moves above this red line, which is known as the 50 in the quantity aspect of this particular chart, we can see over here when this happened in August of 2016, Bitcoin then delayed and had its move up till 2017. Again, in this particular instance, we started moving up from June of 2020 to March of 2021. Bitcoin started to make its way up. Very recently, we have definitively set 4 months. I know the dots showed 3, but the one for April has come out. And for April, we have actually also had a reading of 52. So this is set for now 4 months above the rating of 50, and I think has the capability with the AI structure, with the AI boom, which I'm about to talk about in a second. We could be hitting high again on the manufacturing aspect because we might bring back manufacturing if robotics and AI becomes really easy to maneuver. And that would likely have an impact on the price of Bitcoin as well and show us a risk on narrative like we've been waiting for. And when I talk about the AI boom, I particularly mean the SPX chart as well. Because personally speaking, we have been in this ascending wedge. But when narratives, and if we really go back, if you think about the instances when we had the dot-com bubble, we went high for so long because we had beliefs at what the internet was going to do. And right now, a lot of people might actually think that, hey, you know what, we might go in this particular range and we might keep going higher. But you guys might actually be even surprised. And I personally wouldn't be surprised if we see something like this and keep ranging upwards as well. Now, obviously, I'm not a hopium rocket, and I don't want to be sitting over here and just being an energizer bunny and say this is the case. But for now, I'm fairly bullish because the AI narrative for businesses, AMD, NVIDIA have been so good, it could actually be very beneficial for the SPX as well. As we continue to talk on risk on narratives, we know the Russell is just doing amazing as well. Like another weekly chart, we've just set a green candle again, and we're just setting all-time highs. I'm really glad that the Russell is moving along with the SPX because that's showing strength not only in the large cap businesses, but in the small caps as well to the medium caps. So I'm fairly happy with that. Sell in May, go away narrative is here. A lot of people are talking about it, but we also need to consider that if that was really the case, April was a strong month for us as well. So that's a good setup that we're heading into May as well. And if we look, S&P and Nasdaq have made all-time highs. Bitcoin had a strong recovery. We went from 64K to 78K. And 4 of the Magnificent 7 beat earnings, which we're going to share a little bit through later in this video. The Iran war is now fully priced in. Everyone knows it's happening. Everyone knows its effects on oil. And still we are hitting all-time highs week after weeks. And the headline PCE came in pretty high. I know inflation is an aspect and we are coming in high on that. But as things go through and if the narratives are priced in, I kind of just have to see how this particularly plays out. But right now, what the charts are signaling me and certain pairs, what they're signaling to me is this could still go up and how Trump manages the geopolitics. That I can just pray, honestly. I've got nothing on that, but just being a little bit hopeful there. So we see. But since we've been talking about it, looking at Bitcoin, I told you guys, personally speaking, I told you this last week, I want Bitcoin's weekly to cool off a little bit. For 4 weeks, we went straight up. I personally, look, I really hope that in tomorrow's opening of the markets, we don't go straight up green because I personally want to see it cool off. But then again, who am I to stop the price of Bitcoin going up? So we just have to kind of see that as is. But right now, I personally want Bitcoin to cool off for one-sided moves before we start making possibly our move upwards. Even if it is downwards, I can understand over here. There's a lot of narratives that people are saying, and yes, we are touching the upwards band of this bearish flag. And last time we did that, we went down. But I'm personally, based on the risk on narratives that are presented to you earlier, I'm actually thinking that if we actually set this one to be a little bit red, then we have moved sideways. It's going to be a fairly like a weak bearish candle, this particular candlestick pattern. So from our next week onwards, if we have any bullish momentum, I personally believe we can fire through this particular bearish flag and just make our move upwards and invalidate it. But I'm open to everything and anything because any geopolitical events could screw this up and any tweet can make that happen. But personally, my bias still remains bullish on this particular chart. So let's see how we go on that. The other aspect thing is the Bitcoin monthly breakout. Now, this is not confirmed yet, but it's definitely signaled a really good structure. We have currently broken out of this particular triangle on Bitcoin, and you can see over here, this particular this support trend line is held over years since 2019. So we have found support over here, and we've started moving upwards, and we've broken down out of this downwards trend. So if we have another monthly confirmation that stays bullish and green, then we have a really good confirm to break out, but we kind of just need to see how May follows through with that. One more interesting aspect that's interesting to discuss over here is the liquidation heat map. So in the short term, why I could see Bitcoin's move actually going up is as recently we've actually been trending sideways. More shorts have actually come into the market. And a lot of people, a lot of things are signaling that we could actually have a move to the 79K zone, even touch the 80K zone to show a bit of strength into the markets. So it actually wouldn't surprise me if by tomorrow or the opening of the week, we actually do touch 80K and bring some confidence back up. But we also have some liquidity to the downside as well at 74K. So we could actually still have that fake out. We go up and then we possibly go down before we make a defined direction. But on that, right now we do have a lot of liquidity at the top, which is why I still do hold my bullish bias that this could be the move that we make towards the upside. On the next aspect, I want to just talk about Ethereum. I don't have much to say. We're still below this downwards trend over here. And the Fibonacci, we have a massive resistance at about 2,430. The Fibonacci, the downwards trend line, until unless Ethereum doesn't break out for the risk of altcoins and Ethereum, we don't have any signal to great strength over here. So I'm very hopeful for risk on assets from the perspective of the stock markets and from particularly Bitcoin. But until Ethereum shows any strength right now, we just can't confirm anything. And I'm just hopeful on the each side of things. But on that, one of the things that really do make me bullish for May is that the Clarity Act is almost here. This is legislation that basically gives clarity to crypto assets in the legislation of America. And right now, the banks, in combination to crypto exchanges, have come to a reasonable amount of agreement in which they actually can move forward with a Senate markup to be expected in the week of May 11. So if that actually goes ahead, this would be really good for the markets because we're going to be getting some clarity in legislation for crypto. But until then, like we had no clarification before, but this is really good because if Senate markup actually happens, a lot of senators are talking about this. So I'm pretty happy to see that. And even the percentage in terms of the odds of Clarity Act going into law by 2026 has spiked to 69%. This is like really good things in terms of the betting markets, and the betting markets are a good indicator for us to have a distinction on that. And lastly, when we talk about risk on narratives, guys, we can just see over here that all the earnings that we had come out this week that we wanted, Amazon, Google, like they all had strong beats. Like they all performed very well and their stock reaction did very well. Microsoft even beat their expectations, but they had a bit of a negative aspect. Apple beat their expectations and they were up 3.5% as well. So I think next week we have AMD, which is coming on May 5th. That earnings going to be massive. We have Palantir that's coming in on Monday, something for us to look out for because their earnings be massive as well. But then throughout the rest of May, we have our CPI print. That's going to be a little bit harsh if oil stays up on this high. Kevin Warsh's first appearance as Fed chair, granted he's successful in securing his seat. And then Clarity Act final and Senate deadline. This is something we're really hopeful for. NVIDIA earnings and just basically more PCE print. So May is going to be fairly theatrical in my opinion. If you guys are here, strap yourselves in your seatbelts, get excited, because honestly, I think this is the one that kind of makes it or breaks it. But then again, who am I to say anything? Let's get Steve's perspective on this because he's really the technical guru over here.
Thank you for the vote of confidence. I wouldn't say I'm a technical guru by any stretch of the imagination, but I think you've wrapped it all up in a very, very nice and positive way. I can just basically go home. Everything's positive. Everything's fantastic. Everything's absolutely wonderful and positive, and we've got nothing to fear. But let's have a look at those charts and see if there's anything in here that we need to keep an eye on, and anything that may actually be any potential pitfalls along the way, especially for the rest of this month. All right, so let's take a look at Bitcoin first, then, shall we? So overall, we were talking last time when we were having a look at Bitcoin about this lagging indicator in particular, and it hadn't actually broken through this cloud at that particular stage. But lo and behold, look at what's happened now. We actually have broken through and broken through positively overall. The unit price itself for Bitcoin as well has actually broken through that Tenkan Sen as well that we were discussing last time, being that blue line, which is essentially the trend line itself. So overall, things looking relatively positive, especially bouncing off the support line here of 75,000. Let's just round it up. So actually looking quite positive overall, starting to test some of those former highs as well. So looking pretty good, and having also bounced off short-term moving averages as well as bouncing through the 150-day moving average. So Yash, being very, very positive, mate. And
Mm,
overall, looking pretty good. Okay, so in terms of Ethereum, this particular area overall, you're basically mentioning yourself, Yash, that 2400 was a particular area of concern in relation to Ethereum. I'm going to refine that just a little bit more in terms of taking a look at 2350 and 2340 as being areas of concern because they are resistance areas of particular interest. And you can see that from the daily chart here because that's actually been tested over the last few days twice and being tested in particular quite severely. So far, we haven't had a successful breakthrough of those areas in particular for this last week. We've had it tested the VWAP. So far, successful. Let's see whether or not that remains and whether or not we start actually keeping above these short-term moving averages being the yellow and cyan lines in relation to Ethereum. Should that remain successful, then we've got some strength in terms of Ethereum. Until then, unfortunately, Ethereum is still remaining an anchor in relation to cryptocurrencies. And of course, as you've been discussing so eloquently over the last few videos, Yash, Ethereum basically is your yardstick in relation to all of the altcoins as well. So we'll have a look and see how things go there. On top of that as well, of course, Bitcoin and Ethereum go hand in hand with things as well. So in terms of Bitcoin advancing any further, it would really need Ethereum to hold itself and be able to actually go up with it as well. Now, in relation to the indices interacting with cryptocurrencies, well, we've obviously got the Russell itself. The Russell, as you mentioned a few moments ago as well, is actually reaching and forming higher highs as we keep on going through things as well too. Your chart shows things going on a lot more of a higher high in terms of the way things are actually going on another exchange. This particular exchange here doesn't seem to be actually showing that exact same trend itself overall, but we are actually showing decent movements in relation to the Russell itself.
mhm,
So we've actually gone going above short-term moving averages here overall, and we're actually respecting the Tenkan Sen in relation to the Ichimoku curve, and also a higher high in relation to the lagging indicator. So the Russell is actually performing quite well still, and that also goes in alignment with the SPY. I'll show the SPY first, and we'll go back up here to the SPY. So that's the SPY. Higher highs in terms of the SPY, higher highs in relation to their lagging indicator there as well, and good respect of the short-term moving averages as well. And also the Qs being the technology sector, same thing applies in relation to that. Now, I'm going to throw a grenade in terms of the whole argument here as well in relation to the indices overall, and that's still the Dow. The Dow itself is still struggling to an extent. It is forming higher highs in terms of the short-term moving averages. Okay? We're
um,
seeing it on the daily. However, this is not all-time highs like we're seeing with the other indices. So in terms of Dow theory, we're not seeing all four indices forming all-time highs. That's
mm,
an issue. Now, the next chart that I'm going to show is really going to throw a grenade in relation to Dow theory. The old Dow theory was in relation to this particular chart you're seeing on the screen right now in relation to Dow Jones Industrial Average. The other component that used to be part of Dow theory is the Dow Jones Transportation Average. Now I'm going to show that chart to you right now. Brace yourselves. That's the Dow Jones Transportation Average. This is basically a combination or a composite in relation to aspects such as railroads and everything else that transports things. Doesn't look pretty, does it? The basis behind this was the mere fact that these kind of indexes overall were about moving things around the country back in the 1800s. And essentially, it was basically a matter of we have got commodities, we've got things that need to be transported, all these kind of aspects, and we need to move them around the country in terms of being able to actually transport all of our produce essentially around the country and be able to actually get our economy flowing. That was the whole idea, to get an overall picture of the way that the economy was basically moving. And being able to combine the Dow Jones Industrial Average with the Dow Jones Transportation Average that you're seeing on this screen right now gave an overall idea of the overall economy as a whole. Being able to actually see that very, very quickly and being able to see essentially that the Dow Jones Industrial Average as well as the Dow Jones Transportation Average were making higher highs at the same time gave an overall idea of the health of the economy. When these were not forming higher highs at the same time, generally gave an overall view that there was going to be problems in the overall economy. Whether that's going to be the case coming up in the near future, let's just wait and see. So I'll leave that as a thought whilst we take a look at other things as well that are going on. And another one in real interest in itself in terms of whether or not the economy is going in the right direction, in particular, is this chart, the bonds. Like we've been talking about over the last few weeks in particular, bonds have not been showing a very, very strong picture. In fact, if anything, the bonds have just been basically stagnant over the past few weeks, whilst our entire market has been going up, 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 up. You would want this particular market to be doing something rather than just flailing around and doing nothing. In fact, if anything, now we're actually coming back to test the September lows this particular week. This is not a good picture. You would be wanting the bonds market to actually be doing something in terms of strengthening rather than just basically sitting here and flailing around and doing nothing. In fact, if anything, because the bonds market is actually flailing around and doing virtually nothing right now and really flailing, our yields are actually starting to go up. And this is essentially meaning that the interest rates are actually starting to rise. This could actually be putting pressure on issues of the market such as the small caps. What are the small caps in particular? The Russell Index. So really keep an eye in terms of things like this, putting pressure on something like the Russell Index and all the small cap stocks in particular. And that may be something to really, really observe over the next few weeks in particular.
Agreed.
The US dollar in particular is another thing to keep an eye on here as well. That is actually weakening as we speak. This goes too far down, that's something to really keep an eye on and be cautious about. If this goes too far up, likewise. You want it to be in a bit of a sweet spot, okay? So these are the kind of things to really keep an eye on.
Mm-hmm.
The VIX, not showing any major issues at this point in time. That's our volatility index. The fact that it's actually still going down at this point is actually a good sign. But going too far down can actually be a sign of complacency as well. If it goes too far down, all of a sudden it might actually spark upwards, and then we're in all sorts of trouble once again. So definitely keep an eye on that. As it goes back above 20, that's when the fear gauge kicks in, and that's when institutions will pull back and actually stop buying. So definitely keep an eye and observe that. But the big bear in the room, obviously, is going to be Brent Crude. And we've been keeping an eye on this for quite a while. Biggest areas to keep an eye on are these 4-hour support and resistance lines in particular, and we've been marking this since March. Overall, The 100 line and the 117 line in particular are very, very important, and you can really see that we've had a big bounce, especially with the lagging indicator, off this 4-hour resistance line at $117. We had a bounce off that this week, and we're bouncing off this in particular to the downside over the last couple of days. So more than likely, and as we stated in our last video in particular, we've been overextended for a couple of days in particular, and it looks like we're more than likely going to be coming back down to the short-term moving averages over the next few days. Maybe it's already coming back down enough in terms of this tail, and then we'll probably be coming back and maybe bouncing between here for the next few days before it decides where it wants to go to from here. Will it break out, or maybe it'll come back down to this particular short-term moving average, and then we'll see where it pans out from there. So a lot going on. USO in particular, looks like it's already come back down to this area here. Now on top of that as well, with USO, you can have a quick look at some of the strike prices as well whilst we're at it. And overall, in terms of, say, 12 days being the end of May, the biggest strike price, let's have a quick squiz. 135 is probably one of the biggest strike prices, 135 and 140. You can see these numbers on the left-hand side in terms of open interest. 145 is actually the highest strike price there in relation to things. So it's currently trading at 142. It's around about that price at this point in time. In relation to June, you can actually see in relation to that, 140, that's 3,000 contracts there, 150 strike price, 4.8K in terms of the highest strike price there. But interestingly enough, there's still some people actually trading these up at the 200 strike price. So there's a lot of expectation that this war is still going to keep on going for quite some time. If you head out to July, you're even still looking at some high strike prices out there. 150, people are still looking at it there. 4,500 strike price there. 160, 7,000 strikes out there. But people are still looking quite high, and there's even a couple of thousand people, a couple of thousand contracts there at 200. So there's still a lot of people anticipating a lot more movement going on in relation to those contracts still being traded a fair amount of time out and fairly high in terms of the strikes outwards there. But don't expect this war to be ending anytime very, very soon. And in relation to, say, like our precious metals of gold and silver, they're still just flailing around, hanging out between the 150-day moving average and the short-term moving averages at this point. So they're just sandwiched right now. Not really much activity going on there. So that's gold. And silver may actually be about to start to break out. So it's actually very, very interesting in relation to now silver potentially having a little bit more strength than gold at this point in time. So a few little interesting handouts in terms of one way to the other. That's actually interchanging. Gold was the one with a bit more strength previously compared to silver. Now that actually may be switching around. So some very interesting things happening in relation to the way the markets are actually turning around at different points in time. So as you can see, a lot of interplay going on here, mate, and a lot of things to keep an eye out. But keep an eye on those levels. That is the most important thing in the way it's all going. And definitely keep an eye on your risk. With that, mate, I'll hand it back over to you.
As you've seen, guys, look, the sell-in may go away. Narrative can go really serious really fast if the indicators that Steve just discussed today actually pull us to the downside. But if we have some good structure and some good follow through and possibly some good news events come through, then I'm still hopeful that this is not going to be a bearish May. Just got to wait and see what our news events, what our earnings, and what the new Fed chair could actually be doing for the US markets. So on that, wishing you a very happy May. Thank you for joining us for another month as we've been doing this. And honestly, we've been loving the journey. We've been loving the growth. We've been posting some shorts as well to keep you guys engaged and getting to understand about our channel. If you liked what we did today, please feel free to drop us a like. If you have made it up till now, I would really like it if you guys can put the word liquidity in the comment section. I want to see how many of you guys are actually like following along with us till the end. But with that being said, thank you so much for joining us today, guys. We will see you on the next one.